Suppose you go to your banker, you need a loan, a personal loan. Okay. So the banker will ask you, we need to know your net worth. Okay. What is your net worth? Okay. Net worth is the difference between your assets and your what? Your liability. At one particular point, let's say you are in June, on 30th June, what is your net worth? Okay, so your net worth, what you do is you add all your assets and then you also add all your liabilities and find the difference. Okay, so if your net worth is plus, that means you are good. Okay, so your banker will need will calculate some ratios depending on the figures you present to them, right? So um in other words, in finance or in accounting, we call it what? Your balance sheet. Okay? Balance sheet. So what is a balance sheet? Balance sheet is a list of all your assets, liability, and at the end of the day, you are trying to find your what? Your equity or net worth. Okay. So how do you come up with your net worth or um your balance sheet? Okay. So first of all, you have your assets and then you have your what? Liabilities. Okay. Then the difference will be what? Will be net net worth or your what? Your equity. Okay. So um so under these assets, let me put these in caps. Assets, liabilities, then equity, net worth, or equity. Okay, so under assets, we have two categories. We have non-current assets, and uh, current current assets. Okay, so what's the difference? Non-current assets, these are assets you expect to have them for more than what? For more than 12 months. Current, that is non-current assets, or some may call them what? Your fixed assets. So these where you expect that you have them for more than 12 months or 1 year, right? So if you have your motor vehicle, your buildings, that is your house, office equipment or laptops, those are non-current assets. For current assets, these are assets you expect to have them within what? Within 12 months. Okay. After 12 months, we expect that you not have what? You not have those assets. Okay. For instance, if you have cash, we expect that you spend that cash within 12 months. If you have cash at hand and also cash at the bank. Okay. Also if you have if somebody lends money, okay, or if you lend somebody money or somebody borrows from you. Okay, that one is also what? Your current assets. You expect to receive the money within 12 months. Okay. So on 30th June, these are the balances this person had. Okay. This person had cash at hand. So what is the category for that? That one will go under current assets. Okay. Then how much is it? Cash at hand, how much is it? $200. Then we have bank account, so they have cash at the bank. Okay, bank account. That one. Oh, sorry, I have to put it. 200 will come there. Then cash at the bank, $30,000. Then there is savings account. That is also uh, cash at the bank. Uh, shift cells down, shift cells down. Okay, so if you have a savings account, how much? 1,250. Okay, that is your what? Your current assets. Okay. Car, motor vehicle. You expect to have it for more than what? For more than um you expect to have it for more than 12 months. Okay. So your car there, Toyota Corolla, then furniture and electronics. Those ones as well, they are your non-current assets. Okay. Furniture and electronics. Then you have your laptop. You also expect that you 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 have the laptop for more than what? Um, for more than for more than 12 months. Okay. So let me just a minute. Okay, control shift down, shift cells down. Okay. So you have your furniture, your laptop, that is also your non-current asset. How much is your laptop? 625. And then you have investments. Okay. So these investments as well, the assumption is you have these investments for more than what? For more than 1 year. Okay. So this is where perhaps you invest for the long term rather. Okay. Right. So and then you have receivables. You loan a friend. Okay. So you loan a friend, you expect to receive this money um within 12 months. Okay, so that one is what? A current, that one is a current asset. Okay, okay, a loan to a friend. You expect to receive the money, so it's an asset to you. Okay, how much is it? Um, you loan a friend, how much? That's 250. Okay, and then you have credit card balance, car loan, personal loan from bank, and utilities payable. Okay, these ones from credit card balance, these are liabilities. Okay, what you owe others. Okay, so what you owe others, let me just do, let me, let me create, okay. So under the same liabilities, we have non-current liabilities. Then we have what? Current liabilities. Okay. So current liabilities, these are liabilities you expect to pay within 12 months. Okay. For instance, here, credit card balance. You expect to clear this card balance within 12 months or within a year. So you have credit card balance there. How much? Credit card balance? That's 200. Then you have car loan. Car loan, this one is in non-current liabilities because non-current liabilities, these are liabilities you expect to clear them after, okay, in a period of more than 1 year. So a car loan, obviously, it is a long-term liability. The same with a personal loan from the bank. Okay, so you expect to clear this um, after 1 year. Okay, then you did a bills payable. Okay, so you did a bill payable. These are bills you expect to clear within what? Within 12 months. Okay, so those are what? Current liabilities. Okay, so under non-current liabilities, let's have car loan and personal loan from the bank. All right, so how much is the car loan? That's 3,600. Personal loan from the bank, how much is it? 1,000. All right. So, um, let me just, okay, control one. Okay, so we have listed down our assets and our liabilities. Okay, so this is uh, that is USD, then USD. Okay, so what's the total for this one? By the way, this presentation is the one recommended by the IAS or International Accounting Standards. So under IAS 1, this is the standard which is required when you're preparing this balance sheet. Okay, so um, what's the total for that? Okay, the total is, okay, that one is 11,000. Okay, loan receivable, that's 250. Okay, what's the total for that? You find the total there. Okay. Uh, Let me try to format this. Let me format. How do I get the formatting now? Get the. Okay, let me try to format. Okay. Then for the non-current liabilities, you get it all as well. Then for the current liabilities, you get it all as well. Okay. So we have total, I'll put that in caps, total liabilities. Yeah, total liabilities. Just a minute. Let me shift cells down. Okay, we have total assets. Yeah. So our total liabilities, our total assets, that is this plus that. Total liabilities, we have this plus that. Okay, so let me put it this way. Let me get that. Total assets, I put it in board, I put it in board. Okay, so our assets are obviously more than uh, our assets are more than the what? The liabilities. Okay, so what is the net worth? Okay, the net worth for this individual equals total assets minus total liabilities. So this person has a net worth of 10,900. So this person's capital is 10,900 US dollars. Okay, so net worth is simply the difference between what you have and what you owe others. Okay, what you have and what you owe others. Okay, so you say this is the balance sheet as at 30th June 2025. Okay, so if I want to format, I can format it. Vertical, horizontal, center cross selection. I'll put it in bold. All right. So, and also if I can remove the, let me remove the point, the decimals. All right. So if just a minute, what are we doing here? Okay, that. Okay, I can remove those two columns. All right. So these are what? This is how you prepare your net worth. Okay. This is how you prepare your net worth. And then from there, your bank will tell you what to do. They'll calculate ratios. Maybe as I said earlier, you want a loan. So depending on the balances you have presented to your banker, um, they can decide whether to give you the loan or not. Okay. So how do you a question would be, how did they arrive at the um how did you find the okay, let's go to the assets now. Okay. It is easy to get the value of the cash because you have the cash in hand. For the bank account, you have the cash at the bank. For the savings account, you have the cash at the bank. And then the receivables, loan to a friend. This one, you know how much you lent your friend. Now on these other assets which you have for more than 1 year. Okay, these ones for a car, how do you find the value for this one? Okay, there are standards. Okay, there is a standard, we call it the IAS 16, on how to value your fixed or non-current assets. Okay, we call it IAS 16. Okay, so like for this one, you can say, okay, I have this car. What is the fair value, or what is the market price of this car? Okay, you can contract a valuer to give you the value. Okay, the same with furniture and electronics, and also the same with what? The laptop. For investments, um, you do this with your asset manager, right? They give you a statement. Okay, this is your portfolio. This is how much you have invested this far, and this is the interest you have earned. Okay, so for this one, for investments, it will be easier for you to get the value of that, and so on and so forth. So yes, in short, this is how um you come up with your net worth. You can do it. It's very easy. Thank you.